GST rates have finally come down on the real estate sector. The GST Council has cleared the proposal for lowering GST for housing sector. For the affordable housing sector, GST has gone down from 8 to 1, while for non-affordable housing, GST has gone down to 5% without input tax credit. The council has also cleared new norms, new definition for affordable housing. In metro cities, houses with carpet area of 60 square meters are now under affordable housing, while for non-metros, the barometer is 90 square meters. This with a cap of 45 lakhs for both is something which has been proposed. Well, our reporter Ashna Mishra is on the location where this GST Council meet took place, as well as the changes. Let's go across to her. Ashna, what happened?
Yes, remember ET now told you first that this decision is likely to be taken, and today in a major boost to the sector, the GST Council has decided to cut the GST tax rate to 5% without ITC for the on residential properties, that is the non-affordable housing segment, and for the affordable housing segment the GST rate has been reduced to flat 1% without input tax credit. Remember, this is also in line with the PM's vision of housing for all by 2022, and apart from this, the definition of affordable housing has also been tweaked. Again, ET now had told you first that now not only carpet area but also the definition will also include the value terms. So as we had reported, the definition of affordable housing has now been tweaked as a residential house with a carpet area of up to 90 square meters in metropolitan non-metropolitan cities, and of 60 up to 60 square meter in metropolitan cities having value up to 45 lakh rupees will be classified under affordable housing. And the details of the scheme are being worked out, and the government has said that they will be working out a procedure for the transition as well, and all these tax rates, the new tax rates, will become applicable from April 1st. And according to the government, this is a win-win situation for everyone, for the home buyers like you and I, and for the developers as well as for the exchequer. And the government sources also told us that it does not have any revenue impact, and the revenue neutrality has been maintained even after this move. And after this move, the buyer of the house will get a fair price, and affordable housing segment of course gets a major boost with an attractive 1% GST rate. And apart from this, the GST Council has decided that the issue of tax rate on lottery, it needs further discussion, and it has been sent back to the GOM.
इसको 1% रखने की वजह से अफोर्डेबल हाउसिंग को और 5% को रियल एस्टेट सेक्टर को जो हम एक बहुत बड़ा बूम देना चाहते हैं, और मिडिल क्लास, न्यू मिडिल क्लास, एस्पिरेशनल क्लास, उन सब की हाउसिंग सस्ते दाम पे उनको मिले, ये प्रयास करना चाहते हैं, ये उसमें एक बहुत बड़ा कदम होगा. 1st April is the date, and this decision is certainly going to give a good boost to apartments under construction, because people were otherwise waiting for them to be completed, and that was also stopping the credit flow, the money flow into the real estate sector.
For the sake of affordable housing, it's very important that our fight was on affordable housing should not be discriminated. Group of ministers had proposed 3%. I felt that would punish affordable housing, and I'm very glad that today GST Council chaired by Union Finance Minister has agreed with my proposal, officially written to the Union Finance Minister on the 21st of this month. Justification being your own data. Number 2, I also suggested a 5% for above 40 or 45 lakhs in terms of the housing market. Where did that come from? That came from tax incidence that their own research produced, a 4.7% tax.
This was a relief which was long overdue. If you see, main thing is when flats were half completed or totally not completed, it attracted 12% GST. So that was the main drawback, and people were not buying because of that. and as a consequence the entire real estate sector suffered. Now this is the first step in that direction to give them relief, the industry relief, which is one of the largest employers of people after agriculture. So I think to an extent it will mitigate their sufferings.
The group of ministers had recommended a 3% GST rate for affordable housing, but now we've settled for 1%. I was given to understand that 1.5% would be revenue neutral, but what about 1%? Is the government going to pay?
No, I think 5 and 1% is very close to being revenue neutral. We have assessed that, so there is not a problem. There is not a problem on that.
Lottery, which was not discussed in the GOM thoroughly, because Kerala, Punjab and Bengal were absent. And therefore it has been decided after long discussion to refer it back to GOA. Regarding the realty sector, there are many procedural issues involved, very complicated. And therefore it was decided the officials will continue to work on it, but things are procedural only, therefore they would be determined by a video conference.
Sir, how will the transition to this new rates happen?
See, those are the matters of details. But then we have, GST Council has taken a consensus decision that this will also apply to the currently under construction flats. And therefore this whole transition plan will be prepared. And what GST Council has mandated that before 10th of March this entire transition plan details has to be worked out by the officers committee. We have two committees, law committee and fitment committees. There will be a series of discussions in that committee. By 10th of March the final recommendations would come, and hopefully by 15th of March the GST Council will approve that, so that the entire scheme becomes available for implementation from 1st of April.
So we have been hearing that builders had actually approached the GOM and had asked that they also want the facility of input tax credit intact, as their raw material like cement, they attract the highest slab of 28%. So how will they get benefited right now?
No. The real estate sector will get benefit because the basic tax rate at 5% and 1%. Because if you see even the current 12% and 8%, if you deduct the input tax credit, so actually they were paying this much. So 5% and 1%. So it is actually a win-win situation for the real estate developers as well as the consumers.
Okay. So my last question to you, will there be any sort of revenue loss because of this?
See, what we have tried to ensure is that in this proposal, the way we have done the balancing, that there should not be any revenue loss. Because, you know, for us, what was important was to help the real estate sector and also to the flat buyers and not look at the revenue. So what we have tried to do this is that we have tried to make the whole system as a revenue neutral.
Vivek Iyer now joins us. Vivek, how will this impact the real estate sector? Will this really clear the log of housing demand for the industry?
Two very important proposals. The first proposal that the GST Council meet was actually looking at was number one, reducing the overall GST rate on real estate, and the normal housing that we're talking about, the rates have been reduced. This is in line with what analysts were estimating. So now the new rates are 5% GST without input tax credit. So developers will not get the input tax credit on raw materials such as steel as well as cement. Earlier we had an 18% GST rate with a 6% input tax credit. So overall the effective rate worked out to be around 12%. Also significant development, almost just come into the lower slab. Now this is in line with what the street was anticipating. More importantly, we are now talking about the affordable housing segment. Affordable housing segment, the street was actually anticipating that it will come down to around 3% without the ITC. So now what the council has done is the council has approved a 1% GST for under construction affordable housing, and again this is without the ITC. So no input tax credit, but the GST rate for affordable housing has been lowered to as low as 1%. This is much deeper and much bigger than what the street was anticipating. So this should be seen, and this will be seen as a fillip to affordable housing developers. More developers should be encouraged to actually enter the affordable housing space. They've also gone ahead and changed the definition as far as affordable housing is concerned, both for metros as well as non-metros. So in metros, affordable housing definition is now at up to 60 square meter, carpet area, and up to 45 lakhs rupees is the value of the property. Now, if you're talking about the non-metro area, up to 90 square meters and 45 lakh cost is what they have defined as affordable housing. We spoke to a couple of analysts, and the analyst take is quite similar. They're saying that lowering the rate was quite important, as the inventory in the system was something that was getting very high and getting a little out of control. Given the fact that you're also having a funding crisis, developers are facing a funding crunch as well. The impact, if you're looking at it, very similar to what restaurants follow. No GST input tax credit and a 5% GST rate, and this is pretty much what the entire take is as far as the GST Council outcome is concerned.
Well, let's welcome in our guest on the show now. Mr. M.S. Mani, partner at Deloitte India, is with us. Abhishek Rastogi, partner at Khaitan and Company, is with us. And Sandeep Chilana from Amarchand Mangaldas and Company is also with us. Mr. Mani, let me come to you first. What do you make of the changes that have come?
Okay, so the way I look at it is there are two very significant headline events which has happened. The first is the fact that by lowering the rates, the message that has got sent out is that a large part of the market which had moved from under construction to constructed houses or ready-made houses is now going to see a demand coming back to under construction. Over the last 2 years after GST has been introduced, but essentially not only due to GST, also because of RERA, to be fair, large part of the market had moved from under construction to ready-made houses because people were not willing to wait, and when you buy a ready-made house you don't pay any GST at all, it's only the stamp duty. Now this segment is now going to come back. Now whether it is affordable housing or normal housing, which is above 45 lakhs category, I would say that the rates that have been announced today are very good. If you look at the rates in respect of normal housing, I would not call it non-affordable housing or unaffordable housing, because it would be affordable to some segment of the population. But if you look at that rate, pre-GST, that used to be around 4.5% of service tax and around 1 to 1.5% of VAT, which would typically be around 6.1%. Now that 6.1% in combined has now come down to 5, which means that we are 1% lower than the pre-GST rates. As far as affordable housing is concerned, I think it's excellent to see that the rate has come down to 1% all the way down from 8%. Now, if I look at this as a combination of measures, what I would say is that the government is very keen on reviving the housing sector. They are very keen on reviving the housing demand. Many of the large builders have had issues with respect to their bank loans, and the increase in demand in the real estate sector will not only lead to economic growth by allowing the builders to repay loans to banks, it is also an extremely employment intensive sector. So if the real estate sector goes down, the employment in the overall country goes down. So keeping all these larger measures in mind, it is great to see that the GST Council decided to go in for some drastic measures instead of having small tweaks in rates.
Mr. Rastogi, what do you make of the changes, and do you believe that this will lead to a little bit of demand increasing even for the under construction sector?
See, I think this is a very pragmatic move by a smart government. And why I say that this is very pragmatic is there are three stakeholders involved here. One is the government, which wanted to give relief to the sector. So the government has made the reduction, but the credit chain goes for a toss, which means that while on cards, the rate has reduced significantly from 8% down to 1% and from 12% down to significantly low of 5%. But the credit chain breaks, which means that the benefit of credit is not available. Now, with respect to the builder who were, struggling with respect to the sale of inventory for the under construction services, it is again a good thing for the builder to happen, because the under construction inventory now goes back to the customers in a lucrative way. The third, the very important element is, of course, the customer. And the FM has very smartly divided the entire move between two classes of customers, which is the middle income group. And that's why the limit cap of 45 lakhs has been kept based on the area size in the metro and the non-metro cities, and of course on the other side. Now what happens is that the rate goes down. The customers who are in the middle income group get the most benefit out of it by way of the reduced taxes to 1%, and believe me or not, 1% rate is significantly low rate with or without credits. Secondly, with respect to the 8% rate, also the demand increases, and all the issues which were coming across with respect to anti-profiteering, whether the benefit of credit has gone to the consumer, and we have seen the writ petition in case of pyramid infrastructure, which I am arguing before Delhi High Court. There are plethora of issues which are now coming up with respect to real estate, and what I understand is there are dozens of these inquiries which have gone for the real estate sector. So I think from the perspective of ease of doing business for the real estate sector, also the move is very, very lucrative on the cards.
Right. Sandeep, how would you look into these changes that have happened? It will boost demand?
Well, I think all the good parts about the proposed change has already been highlighted by the co-panelists. I would highlight, what I believe is going to cause a lot of problem or are the risk areas. And the first aspect and the most important aspect is that as far as the policy perspective is concerned, GST was designed to have a seamless flow of credits. And today's move obviously is creating yet another exception to that policy decision where credit should have been allowed for payment of output taxes. The reduction of rate in real estate comes with a condition that the builders or the developers would now not be eligible to claim the credit of taxes that they pay on the input side. This will lead to a lot of issues. The first aspect is obviously government will have to come up with a rule to ensure that the developers continue to buy from the registered dealers, and therefore the total tax collection of the government is not impacted. Second important aspect is with respect to the what we call as the transition. How will these flats which have already been sold, for which part payments have already been received, how would the taxation of those flats happen, especially where the builder has taken credit with respect to the services which have already been rendered, and half of the payments are yet to be received, whereas the construction of the property may have completed to a greater extent. So that's the second challenge. Obviously, the revising the definition of affordable housing and bringing flats up to 45 lakhs, subject to obviously a cap of 60 square meter or a 90 square meter, is a very, very good move. It would ensure that the benefit of the lower rate of 1%, which, as Abhishek rightly said, it is by any measure is a very, very good rate, even if credits are not allowed. That will make sure that the inventories which are standing in market right now would get liquidated very easily. They should for sure boost the demand for those inventories. The other and third important aspect is with respect to land. There are various areas where the value of land is much more than the value of construction involved. And in those areas, this 5% would still continue to cost a lot to the customer and would form a major chunk of taxes that the customer will have to bear on their houses.
The perspective as well, Morvin Gudillo, Goa GST Council member, is now joining us. Firstly, thank you so much for taking out time for us. Could you just first talk about the measures and what sort of boost it could have for the sector?
As you know, the real estate industry was in total doldrums, and it is the largest employer of people after agriculture. As against that background, many of the constructions, flats, which were lying vacant because of the 12% GST that was imposed on incomplete flats, there was an inventory of lakhs and lakhs of flats which remained unsold all over the country in different sectors. So we needed to give the real industry a boost, and now 10% residential properties as well as 1% for affordable residential properties without 60 square meters in metros and 90 square meters in non-metro areas, up to with a cap of 45 lakhs. I think this is going to by itself give a big boost to the real estate industry. At the same time, I understand there are many rough edges that need to be smoothened. Even that we are going to take into consideration at a later stage. But I think what these steps which have already been initiated, which have been taken, will itself give the much impetus that was required for otherwise sluggish industry. And we have done it in this GST Council meeting.
We'll also get industry voice. Niranjan Hiranandani, MD at Hiranandani Group, is with us. Mr. Hiranandani, thank you so much for taking out time for us. Could you just talk about the volume boost that this rate cut could give to the industry over a period of time?
I think it's a huge psychological boost to the consumer. The consumer is going to be delighted because this 12% was a no. And now he's now very, very clear in his mind that 5% would be okay for him to pay under the construction property because 12% just was not being swallowed by anybody. Number two, you have to remember that from 12%, once you get occupation certificate, it goes down to 0. So now it's 5% to 0, so it's still affordable and digestible. Number two, the definition change which has taken place of 90 square meters and 60 square meters, which are there affordable in the city limits, metros and non-metros, is another big thing because in the earlier definition, affordable did not connect with the smaller apartments. It was also connected to the price and other factors. This has been changed. So I think that is going to be another boost which is really taking place. So I think all these things, if you look at it, is very, very, very positive, and we welcome it tremendously. We were looking forward to it, and it affordable being 1% is really a gift to the affordable segment.
Right, so an overall construction cut, under construction cut coming in, not only affordable, but even for non-affordable. Is that something which surprises you?
No, it's not surprising at all. We've been talking about it with the government for the last 1 year. In fact, they've been assuring us for a long period of time that this is likely to be considered, but it was delayed tremendously. So we are actually pretty happy that it has finally happened. This was expected to take place last August, September, October. On rental housing, we needed something. I feel that a lot of emphasis has been given on ownership housing. But even the richest country in the world, America, 50% people live in rental housing. And the GST on rental housing is still too high. And I think that rationalization has not taken place. We need to do that in terms of it, both at the local level, municipal corporation level, state level, and of course, GST and central government level. I think that is missing, and we shall fight for that. The
definition change that has come in for affordable housing, you think it was needed, and this itself will lead to a lot of demand picking up?
I think it should certainly lead to the demand picking up, and I would give credence to what Mr. Hiranandani said because he's precisely in that business. So when he says that there would be an uptick in demand, we should take that. Having said that, from a tax perspective, I think the way I would look at it is to say, look, there are a lot of issues plaguing the real estate sector, a lot of tax issues plaguing the real estate sector. Now, we should not for a moment imagine that all those issues are settled. This is certainly a very good beginning. It is good to see that the government is being proactive, but the changes that have been made today will certainly give rise to a few issues which remain unresolved. For instance, in GST now, despite the fact that the 5% comes without an input tax credit, we would have something like a quasi-inverted duty structure. And an inverted duty structure, as you would be aware, typically happens where the rate on the output is far lower than the rate on the input. Now, in case there is no eligibility for input tax credit, the problem magnifies because the largest item which is consumed in constructing an apartment are steel and cement. Now, cement attracts GST at 28% and steel attracts at 18%. Most of the services that come together with it also come at 18%. Many of the other items come at between 18% and 12%. Now, all these are inputs that go into the construction of an apartment. And the fact that now there's going to be no input tax credit should, in my view, be looked at by saying that all of these put together constituted a certain percentage of the apartment cost. If that percentage exceeded 5% in the past, in that case, yes, we have a challenge, and the price of apartments, instead of going down, may see a marginal increase. So depending on the kind of apartment and depending on the location of the apartment, is it Mumbai, is it Nasik, is it Pune, I think all builders will now need to rework the economics of each project that they have, including constructed and non-constructed.
So much, gentlemen, for taking out time for us. Always good to get perspective from you. Of course, this was a news flow related discussion that we had. More details, as all our guests pointed out, will be coming in soon.